So I think aside from the obvious rising potential for inflation and rising interest rates, I think you will see increasing bifurcation in the market. I think there will be a flight to scale and a flight to quality, which will obviously work well for a certain group of managers, but I think slightly on the negative side, there has been a case of the rising tide lifting all ships in the private debt space, maybe the last 5 to 10 years. And I think it's a good thing for the asset class overall that there is a bit of filtering, I guess, over the years. I think it will make LP selection that much more efficient. And I think we'll start to see some real quality managers emerging and specialists within their niches. So it is an exciting time to be investing in this asset class. But there are some challenges ahead as well. I think I can only really speak for the area that my company sort of invests in, which is sort of lending with high growth companies. And I think we have really sort of benefited from one of the market dynamics of a slowdown in late stage growth equity finance, whereby the debt becomes a very attractive alternative, a non-dilutive alternative to raising expensive equity capital. Again, that has created its own bifurcation between the haves and the have-nots, well-funded businesses versus businesses that have been unable to raise finance. That presents its own opportunity for maybe a distressed or a particular sort of structured credit lender. We're a little bit more focused on the safer assets, I suppose, the well-funded businesses. But with the increase in pricing and spreads, there is a very interesting growth potential here that we're hoping to capitalize on, as I'm sure a lot of other managers are as well. Again, I think it goes back to that bifurcation element as well. I think a lot of limited partners have deployed into this space and made some picks, let's say, with a core portfolio. So I think there's a core portfolio of very traditional sort of corporate credit, direct lenders, and what we will directly benefit from is the maturation of the private debt asset class as a more satellite investment strategy. We will obviously benefit as people look to diversify their portfolios, and will ultimately take a look and see what areas are they lacking. Is a more sort of specialist growth area that they want to get exposure to, for example. So that's a development I hope happens, but it's certainly a trend we have seen increasing over the last 3 or 4 years, really. I think it's been very productive from our side. I think we have been attending Informa events for many years. Obviously, one of our partners was a speaker on a dedicated panel. So we find this a very useful event to have a unique sort of a variety of conversations with different stakeholders, and also to see which limited partners are sort of ultimately looking to invest within this space as well. It can be quite challenging to either find the right person to speak to, or the right team, or even the right LP at times. And these events, facilitate that process, as well as I said, an opportunity to, speak to your peers, hear some different perspectives on what is a very varied asset class as well, compared to say, private equity or venture capital.